What's up, YouTube? Don't mind my background. It's a little more loud today. A couple more people in the house, but today we are going to be talking about part 2 of where to put your stop losses and where to put your take profits. Like I said in the last video, we're just going to be looking at where to put them in the we're going to be showing examples in the chart. Last video we showed examples of me just drawing it. Giving y'all like a thoughtful like how to, where to, just like an idea in your mind and stuff. But today we're going to be showing it on the chart and where we can put like the actual stop losses. Last video we talked about how we can put stop losses on previous forms of liquidity and session highs and session lows. We can also put it at the bottom and top of order blocks, and yeah. So it goes first you look for previous forms of liquidity. That's your first thing. You map out those because those are most likely going to hit, because everything in the chart needs to be filled. Everything that goes down has to come up in the chart, so everything needs to be filled. So you're going to be looking for previous forms of liquidity. Then you can look at some stop losses right there. Then if you don't see a lot of previous forms of liquidity or a good one that you want to put in, then you can go to session highs and session lows of previous sessions. Remember, we always look at previous stuff, not the stuff that's happening right now, previous stuff. So you can look at highs and lows of previous sessions. And then after that, if you don't want to put stop losses or take profits at highs and lows of previous sessions, then you can put look for order blocks and put it at the top and bottom of order blocks. So we're gonna go with previous forms of liquidity first. We're gonna show some recent ones. There's a lot of examples, as y'all can see right here. There is a lot of examples. And like I said, everything that happens needs to be filled. This down, all the way down, it came all the way back up. It's just liquidity. They're just getting it up and getting it back down. Alright, so boom, right here. So this is kind of like a trading thing you would see. I took some trades off these. These were bad trades, but it's okay. So look, this is like a lot of consolidation. This is going down, go up, going down, but you see it always has to be filled. So you're looking at this New York session. What you would do, you would look at this liquidity, previous form of liquidity right here, right there, boom. That's also a top of an order block, because as y'all can see, it's a little move up and then it goes right back down. That's an order block. No. I don't know. Nah, I'm joking. But this is not an order block. Order blocks start at the top of the moves. I'm tweaking. Order blocks start always at the top of the moves, like I said. We're learning together, you feel me? But yeah, this is a previous form of liquidity right here. This right here is also a previous form of liquidity. Those are two right perfect there. You can also put like right here, I guess, but I don't know. I mean, also map this out, because you can. So all three of those lines, they got hit. As you can see, everything that goes down has to come back up. It took a while, it took a couple days, yes, but all of it always has to get hit. All three of those lines got hit. Some even closed open. All of them actually closed open. Okay, let's give y'all another example of liquidity. We're gonna do 2 examples for each, or 3. Actually, I'm gonna do 2, and if y'all need extra assistance, y'all can ask me. Boom, perfect. Perfect, perfect, perfect. We're in a downtrend right here, you see? We're in a downtrend. Or should I do an uptrend? I mean, uptrends usually last like right after and then, okay, no, this is perfect. Oh no, this is beautiful. Okay, let's do an uptrend. Let's do an uptrend. All right. No, we just did an uptrend. No, oh yeah, let's do an uptrend right here and then going into a downtrend. So boom, previous forms of liquidity right here. I put boom. Aye, man. Boom, right here. Previous one. Boom, right here. Previous form of liquidity. Boom, right here. Previous form of liquidity. And you can even map out this one. These are session lows also. As y'all can see, the previous forms of liquidity are matching out with the session lows. Those are 4 previous forms of liquidity. Now let's see how many hit. 1, 2, y'all can already see. Okay, 2 out of 4. And it looks like the rest is gonna hit because we're in a downtrend throughout this. This might be well, two out of those 4 hit. So what you would do is you see this big uptrend, and you can even map out these. This is another previous form of liquidity that I would have hit. It would have been shorter on profit, but yeah, what you could have did right here, boom. Now I'm gonna put it all together. I'm just gonna in another video. I'm just gonna show y'all where y'all can do it and yeah, where the previous one of liquidity is at. Could have put it right here. Boom, boom, boom. That would have been a beautiful stop loss above right here. I would have put my stop loss right here. Boom. That's like, I don't even know how many profit, but yeah, that's some good profit right there. Okay. Those are that's liquidity. And now we can look at the order blocks. So no, not the order blocks. It's next is the session highs. So session high right here. Got closed right here. Session low. Session lows. Session lows give you less less profit because just Z, man. Sessions, the session lows and stuff, unless they're like really big, they give you less profit because all the sessions are really close to each other. As you can see, like these session lows, this one's a little big gap, that's what I was saying, but these right here, they're all really close to each other, especially if it's a lot of consolidation in the previous market. They won't give you like a lot of space to do it, and some of them are like even, like right here, New York and London right there. But that's always your second choice, and your third choice is to find the order blocks and the previous ones we could boom perfect right here, right before start of a thing. This is a whole order. This is a whole order block right here. This is a whole order block right here. And where did it get? And did it get hit? Boom. It got cleared. It got cleared. Pushed all the way above this. Actually, double above this. You could have put that either at the high or a low. I would have put it at the high. But this got flushed out, chat. I'm talking about chat, y'all on YouTube. I'm tweaking, I'm not streaming right now, but yeah. That's the order block right there. Now let me look at the as y'all can see right here, boom, right there. But I'm trying to look for going into the uptrend. I hope you see the God in me. I hope you can see. I hope I'm not too late to set my image straight. I know I'll make you wait. How much can you take? Hope you see the God in me. Hope you can see. Oh yeah, I forgot to tell y'all one thing. I don't know if I told y'all, but this is like higher time frames definitely have higher power. So if you're like ever confused on where the market is going, like if it's going bearish or bullish, you can always look at higher time frames and they will show you. Because if the 5 minute is showing that it's going down, right? The 5 minute is showing that it's going bearish, but the monthly, the weekly, the 6 month, and the yearly is talking about it's gonna go up. I think we want to take the up. You feel me? Because it might be a little short down, and then it might go up, and that's not even gonna show on the monthly and weekly and stuff. It's just gonna be a one candle, because that one candle is never gonna close when it's going down a little. You know, it's only gonna show on the lower time frame. But let me show y'all a thing. Boom, right here, that got cleared real quick. Right here, in a downtrend, this order block right here, and it's a session low, and it's a previous form of liquidity. That's triple. That's telling you 3 times that bitch is finna hit. So you're finna wait for this move up. All this liquidity, as y'all can see, this was some heavy news right here that day. All this liquidity. Yes, it was, because I remember this. This was literally Tuesday, and I lost this trade right here. I didn't even see this. As I go back, you see stuff that you feel me? But this got flushed, chat. This got flushed right here. Boom. Heavy big candle down there. You would have got a bunch of money off that. So you wait for this previous form of liquidity right here, then a lot of consolidation, come back up, a high, a low, a higher low, a lower high, higher low for some reason. It's like until some consolidation, some weird shit, and then you see this break right here. This is another order block right here. You see this break, and that also got cleared right here. Everything falls into one another, chat. Everything falls into one another. Everything has to be filled in these markets, as y'all can see. And that was for take profits, and now your stop losses, you can put them at the same thing. Your stop losses. I read this one book, and it was talking about it was like showing the results of if you put more through your stop loss, then you can then you will win more often. That is kind of true, but I don't think you should do that, because if you do have a bad stop loss, like say if you what was that one trade right there? Say if you took a high right here, you thought it was gonna keep going up. Let me put it long. If you took a long right here, you thought it was gonna keep going up. You put it like above this for some odd reason, I don't know. And you put your stop loss like way under here, because you're like, oh, I really don't want to lose this trade. You know, this is never gonna hit. And then you lose all the money in your fucking account. You feel me? This is not even a good trade. A 0.62. You're not even making any money off this. But it is true that if you have a higher stop loss, you will lose less trades. but you should definitely go, but you will make less money. So you should definitely go off like previous forms of liquidity, like boom, stop loss above this, right here, above this, and then all the way down here to where this either this one or this one. Perfect, beautiful, chat. This is beautiful. This is literally beautiful. Everything is folding into one another. You can either put it right here, which is a this is a 202 risk to reward, or you can put it right here, which is a 242 risk to reward. And they both got hit. They both got hit. You made some money off this, above this, and you wouldn't have got stopped out. Even this, even though you hit this, if you would have put your stuff lower than this, like say like under here or something, you still wouldn't have got stopped out by this. Yeah, you still wouldn't have got stopped out. I need to think of this while I'm trading. The hell. But yeah. But so that's stop losses and examples in the market, and that is take profit examples in the market. Thank y'all for keep watching the videos. Thank y'all for the support, and drop a like in a comment. Talk to me about what you want to learn about more. You can go in the Discord and message me personally. I'm always open. Follow up on FL Boy Will on all platforms. And I'll talk to y'all tomorrow with another trading video day. I think this is trading video day 13 or something. I don't know. Thank y'all though. I love y'all. Peace out.